for tuning in to this edition of Business Daily. I'm your host, Lee Ji-yoon. Before we get started, let's see what we have lined up for you in the latter half of our program. We take a look at how Korea's economy has developed and grown in the past 70 years since it was liberated from Japan's colonial rule. What stories made headlines in global business news this week? China's surprise move of devaluing its currency while Google rebrands itself with the new parent company, Alphabet. Look forward to these stories and more. Samsung Electronics has unveiled two new high-end smartphones at a glitzy press event in New York City. This sooner-than-expected launch is in line with the Korean company's efforts to win back the crown from its rival Apple in the North American market. Our Son Jang-in takes us there.
The co-CEO of Samsung Electronics took to the stage to showcase the brand new Galaxy Note 5 and the Galaxy S6 Edge Plus at the company's Unpacked event in New York City on Thursday.
The Note didn't just succeed, it created a category.
Thinner and slimmer than its predecessor, the Galaxy Note 5 allows users to take notes on their devices even when the display is off to save ideas that just popped into their heads. As for the bigger version of the curved smartphone, the Galaxy S6 Edge Plus, it comes with a feature in which users can add favorite icons on the Edge display to get faster and easier access.
And I think, yes, with these new designs from Samsung, these are absolutely fantastic new smartphones that absolutely beat Apple in almost every factor right now.
Topping off an exciting day for the company, Samsung also launched its mobile payment system, Samsung Pay, pre-installed in the two new phablets and the ones released in April. The service will be available in Korea from August 20th and from September 28th in the United States. Industry experts say Samsung's earlier release and change in location of the showcase comes as Apple is set to launch its new iPhone models next month. Samsung Electronics remains the leader in the global smartphone market, but the company's earnings have been eroded by the rise of Chinese firms and Apple's latest iPhones. The Galaxy Note 5 and the Galaxy S6 Edge Plus will officially go on sale next Friday in the United States and Canada and around the world from later this month. Son Jang-in, Business Daily.
Korea's top automaker Hyundai Motors thought to have seen up to $136 million in damages from the massive explosions that rocked China's northeastern port city of Tianjin. Hyundai said that it had about 4,000 vehicles parked in yards at Tianjin port when the explosions happened. It said it has not been able to immediately assess the extent of the impact, but did say all vehicles are covered by insurance. The world's fifth largest automaker produces cars locally for the Chinese market, but ships in its higher-end models from Korea. Other car makers are also estimated to have been hit by the explosions, including Germany-based Volkswagen, which reportedly lost over 2,700 cars. The deadly blasts from Wednesday night left dozens dead, with over 700 injured. The Korea Grand Sale, one of the country's largest shopping events, has kicked off this Friday. The event mainly targets foreigners visiting Korea and has been pulled forward on the calendar to give an extra boost to the local tourism industry and economy, both hit hard by the MERS outbreak. The Grand Sale, which is organized by the Visit Korea Committee, is at its largest scale so far, with nearly 250 retailers and 30,000 vendors participating. The shopping event will run for 79 days until October 31st. From aid recipient to donor, and now Asia's fourth largest economy, Korea has racked up some impressive achievements over the past decades to reach its current stature on the global stage. And our Song Ji-san has a snapshot of Korea's economy over the past 7 decades.
Korea's remarkable post-war economic growth is often referred to as the miracle on the Han River for its rapid industrialization, technological achievements, and urbanization. Now, GDP has surged 31,000 times since 1953, from $41 million that year to $1.4 trillion in 2014. And today, Korea is the 13th largest economy in the world in terms of purchasing power. The country's gross national income per capita jumped to $28,000 last year from just $67 per person in the same period. Now, all of this has been made possible by Korea's robust export growth. Korea is currently the world's sixth largest exporter, with over $573 billion last year from $25 million in 1956. The country has also grown in size, with the population more than doubling since its independence from Japan. Now, half the population live in the metropolitan areas, with 10 million in Seoul. With the rapid development of the health and welfare systems, Korea's life expectancy has risen from 62 to 82. But questions remain about whether quality of life has improved alongside the country's rapid economic growth. And several indicators reveal a darker side of the Korean society. For example, the suicide rate soared to 28 per 100,000 people in 2013 from just 8 in 1983. Now, that's the highest among the OECD member nations. The income gap is also rising by the decade, meaning the country will have to act soon to address the disparity. Song Ji-sun, Business Daily.
Now, many Koreans believe that graduating from a four-year university can increase their chances of landing a job here in Korea. But that might not be the case anymore, as figures show that young Koreans studying at two-year colleges actually have a higher employment rate at over 60%. Our Lee Ju-young tells us more.
These students are demonstrating the intricacies of decorating a cake with edible flowers.
I was not very confident about my skills, but I think I can get good at this with practice.
At this 2015 College Expo, students are busy going from booth to booth, checking out what subject to major in. The preference over the years has changed drastically. While majors tied to engineering were popular roughly 10 years ago, Korea Council for University Education says students are increasingly choosing more unique majors that are related to the service industry.
There are around 2,000 majors for two-year colleges. There's a K-pop major reflecting the Hallyu culture. Cooking is also quite popular these days, so we gear the studies specifically towards fields like hotel cuisine.
With the youth unemployment rate in the double digits, more students are choosing studies that they believe will be more practical in the job market. Because of this, majors have become much more specific, such as helicopter maintenance, smartphones, or even studies that train students for specific franchise restaurants or hair salons. Although these fields may sound rather unusual, the enrollment rate of two-year schools with these majors have been steadily increasing for the past 5 years, posting an overall 99% enrollment rate this year.
Before, these community colleges were where students went when they couldn't get into other universities, but now students at these schools can use their talent and have greater dreams.
While these new majors may come with advantages, many are still concerned that the narrow scope of studies may limit career development in the future. So experts say it's important for applicants to identify their interests as well as the outlook for employment before making a final decision. Lee Ju-young, Business Daily.
And now it's time for us to get a check on some of the global business stories that made headlines this week. And for that, we turn over to our Eunice Kim. Hello, Eunice.
Hello, Jude. Yeah, let's go ahead and start with some stories that popped up earlier on in the work week. On Monday, Google announced it would be restructuring to create a holding company called Alphabet, under which the popular search engine will be a part. ABC.xyz.com is where you'll find that announcement by Larry Page explaining he and his fellow co-founder Sergey Brin were reorganizing to make the company cleaner and more accountable, separating Google from its less-known incubator projects and investing arm, among other parts. Thus, Alphabet would be a collection of companies of which he and Brin, or rather he would be CEO and Brin the president. Investors welcomed the news with open arms, adding $20 billion to Google's market cap in after-hours trading. And over to Europe now, the fate of Greece's next bailout package appears to be up in the air. Debate at the Greek parliament roared on late into the night on Thursday over the terms of deep spending cuts and tax hikes. Greek lawmakers will need to endorse the memorandum of understanding before Eurozone ministers can greenlight it. They'll meet later on this Friday, and even there's a roadblock as Germany has expressed its misgivings on the draft deal worth $95 billion. Meanwhile, Greek GDP logged an unexpected growth spurt in the second quarter, a 0.8% expansion against economists' expectation that it would contract. Russia, on the other hand, has slipped into a recession, with second quarter GDP figures contracting by 4.6% on year after it lost 2.2% in the first 3 months of the year. This comes as Russia's main growth engine, oil, continued its tumble, hitting a 6-year low on Thursday, Brent crude slipping further below $50 a barrel. The International Energy Agency said on Thursday it sees no immediate relief in the oil glut, as it expects it to continue through 2016 after hitting a 17-year high.
And in fact, this week's yuan devaluation also pushed down the price of oil even lower.
Yeah, you're right. Absolutely.
Right. And it seems that, though, that markets are now on a recovery track with the Chinese currency seemingly returning to its normal fluctuations.
You're right. The reference rate, in fact, did do a rebound and came back at 0.05% earlier today for the first time since that crazy 3 days straight of the falling yuan. It looks like panic has subsided as well after the Chinese central bank's rare press conference yesterday. Markets closed up in Asia as the Dow wrapped its trading day on Wednesday unchanged. It was a very different picture, though, from what we saw midweek.
It was a back-to-back-to-back surprise currency devaluation. The tightly controlled Chinese yuan was allowed to drop against the U.S. dollar on Tuesday, Wednesday, and Thursday, amounting to a devaluation of 4.6% over that stretch, much larger than the typical fraction of a percent.
昨天收盘跌幅达1.5%，因此影响到了今天做市商的报价，最终影响到了人民币汇率中间价。
It appears to be the latest weapon to stave off a declining economy after Beijing poured billions of dollars into its markets and state-controlled banks when its bourses recorded wild swings just weeks ago. With suspicions Beijing allowed the slide to boost its export competitiveness, concerns of a currency war were sparked as Asian currencies took a tumble. As of Seoul's market close on Wednesday, the Korean won fell to its lowest point against the greenback in nearly 4 years, as the Malaysian ringgit and Indonesian rupiah plunged to levels not seen in 17 years. They're all countries that have strong trade ties with China. And as if to calm frazzled nerves, on Thursday, the People's Bank of China explained the events as a one-time fix, that its new forex mechanism applied this week would base itself on its currency's performance the day before, and that the recent declines brought the yuan closer to market levels.
China has set out to internationalize the yuan. If its value changes with the market currents, it'll raise the yuan's credibility.
In fact, even as shockwaves reverberated throughout world financial markets, the International Monetary Fund came out to call China's latest move an apparent welcome step that allows market forces and less Beijing's hand to determine the future of the yuan.
All right, let's dig into that a little bit more, Eunice. I mean, some say that China might have let its currency slide with the IMF in mind.
Right, and that's because China has been eyeing an inclusion into the IMF's reserve assets, also called the basket of currencies, also called the special drawing rights. Now, if it succeeds, the status of the Chinese yuan would be upgraded to the likes of the euro, the US dollar, the British pound, and the Japanese yen. This would, of course, give countries more confidence to add the yuan as currency reserves. The IMF, for its part, though, said that the recent move would have no direct implication on its final decision on that, though it did encourage China to continue on this path.
So this could be China opening up to more outside pressures. All right. Well, what's certain here is that, though, a weaker yuan would make Chinese products more competitive in the global market.
Right. And that is the other school of thought, that this last bout was perhaps just China making a calculated structural move to benefit its trade. But some economists view it as more than that, since global demand for trade generally is already weak. Some view it as growing pains for China as it tries to transition itself out of a government-propped economy to one that's more run by consumers, though it could be a difficult transition.
All right. So, and especially since its exports aren't doing so well.
You're right.
In fact, I have some numbers here. 8.3% on year in July it fell by.
You're right. No thanks to the rising dollar against which the yuan was more tightly pegged. And other indicators weren't so good either in July, June. July factory data up 6% and retail sales up 10.5%. Still missed estimates, and fixed asset investment also came in lower. And some China watchers suspect the world's second largest economy is doing worse than it's letting on, as construction, real estate, and financial services all are showing signs of struggle.
And that could also be bad news for some emerging economies as well.
Yeah, absolutely.
All right. Thank you so much for coming in today, Eunice.
You bet.
And that wraps it up for today. Thanks for watching, and see you soon.